The BNB chain was halted after $1 billion hack. Bankless Nation, happy second Friday of October. It is roll-up time. It's also a special DevCon roll-up. David, you were hanging out in Bogota, Colombia at DevCon this week. How's it going, man?
Really good, man. Bogota is a ton of fun. And DevCon is just going absolutely fantastically. There's so much energy here at DevCon, and it does kind of feel like the last bonfire of energy in this bear market in the crypto space. But everyone is just really excited to be at DevCon. The talks and content is just very, very rich. Just people are stoked, man. People are really stoked to be here.
David, DevCon is an Ethereum specific conference, or is it wider than that? And then this is the first time it's been in person in a while because of, COVID and everything else, right? So this is the first time the entire Ethereum community is there. So give us a sense of the vibe,
right,
and to what DevCon actually is.
Yeah. DevCon is, I would say, the foundation of much of the rest of global Ethereum conferences. It is the it's not only actually anymore, but it is the conference thrown by the Ethereum Foundation. So yes, it is Ethereum specific. In years previous, however, there has been many other exposures to other chains. EOS and Ethereum Classic famously had a significant presence, and Algorand had significant presence at, when was it? Osaka. Which was the last DevCon that happened in 2019. There has not been a DevCon
2019?
Right. There's not been a DevCon in 3 years. And it's actually made this DevCon many people's first DevCon, including myself, which many people are surprised. It's like, oh, David, you've been in crypto forever. This is your first DevCon? Yeah. And many other people have also not been able to go to the DevCons prior. I remember DevCon 2018 in Prague. I had just gotten into crypto, and I was just couldn't convince my company to send this person that they just hired all the way to Prague to go to DevCon. And then 2019 was Osaka, and kind of the same deal. If Osaka was going to be a $4,000 or $5,000 trip and Ether was $100, I was like, I really want to go, but
I'd have to sell some ETH.
I'd have to not buy some ETH. And so this is my and many others' first DevCon, and Ethereum as an ecosystem is just completely different from last DevCon. Last DevCon was 2019 at $100 to $200 Ether, and there was no DeFi, very little DeFi, absolutely zero
layer
NFTs,
twos.
No layer twos. Plasma was our scaling solution at the time. And so it's just a fundamentally different DevCon. And they made this really cool video. I'm going to see if I can get the video from the EF and just do something with it. But they made this really cool intro video. And man, I got goosebumps, dude, of just the road to DevCon and what it took to get here, going through all ETH Dev Connect, the merge, EIP. It was like a speed run of the last 3 years of Ethereum history in this
awesome.
really cool animated promotion video. It was really, really cool.
And I know this is Ethereum community, Ethereum ecosystem, and it's heavily the dev in DevCon stands for developers. So it's a heavily developer-centric kind of conference. How many people are there? We're in the thousands, right?
Oh, in the many thousands.
Okay.
I don't know numbers, so I'm going to spitball here. I think something like 8 to 10,000 people.
Wow.
Maybe
Don't
less.
quote David on that,
Maybe
though.
Less than that.
5 to 10,000. How about that?
Definitely 5,000. 5,000 feels
definitely
very safe.
5,000.
Yeah, I'm going to go with 8,000-ish. But you're totally right. And it is, I was talking to people about this at DevCon. It's not even application layer stuff. There's not many DeFi apps or NFTs conversations at all. The conversations are the Ethereum protocol, EIP 4844, account abstraction, post-merge stuff, layer twos, it's staking infrastructure. We are
deep in the protocol,
deep in the protocol stack. We are not, the focus of this conference is below the application layer. So not even DeFi apps have exposure here.
Are you seeing any suits? Any suits and ties going on?
No suits. Yeah.
As it should be.
Yeah. Mm-hmm.
Sorry, all you suit wearing dapper, gentlemen and gentle ladies. That's just, it's nice to just kind of chill and be with the developers and kind of wearing whatever is comfortable.
You know what's also been fun, Ryan?
What?
I don't think you know this. No hay mucha gente que sepa eso, pero puedo hablar un poco español. Sí, so Está hablando español aquí in Colombia. So it's been a little bit of fun. I've been practicing my Spanish.
Wow. Well done.
Yeah.
How's it holding up? How's your Spanish holding up with the natives?
Bien. Yo vive en Guatemala para 2 meses. Yo vive en Argentina para 2 semanas. So I've been like shaking off some rust, but it's been good.
That sounds impressive, actually.
Yeah.
Bankless Nation, rate David's Spanish right now for us in the comments. Tell him how he did. But you got to appreciate the effort, right? That was great, David. Well, anyway, we got a lot of topics to cover this week. The first is, of course, DevCon. What's going on? There have been a slew of announcements coming out of DevCon that we got to talk about. Also,
big announcements that people are super surprised by. Yeah, so we're going to cover that.
Also, we have the BNB chain that was halted after $1 billion hack. David, are chains supposed to halt?
Not the Ethereum chain, but we'll talk about whether it's appropriate for other chains.
And finally, we've got the ultimate showdown, I think. David Hoffman versus Janet Yellen. Yes, David Hoffman from the Bankless podcast. We're going to talk about that. All right. David has been named as a co-plaintiff in a case against Treasury. But it's not a bad thing. It sounds like a bad thing, actually, but it's actually a really good thing. We'll get into that. And of course, as always, make sure you like, subscribe, and review wherever you're watching this, wherever you are listening to it. Get us
with
to
your
the top of
morning
the
coffee.
charts.
Here's my
morning
espresso with 0 sugar or milk. Yeah.
Oh, that's amazing. I bet the coffee in Colombia is pretty tasty, right?
Yeah, it's pretty decent. Yeah.
All right. Well, before we get in, I want to talk about our friends and sponsors at Galxe. They want to invite you on a DeFi crypto adventure. It's adventure time in crypto. David, what is Galxe? What are these guys up to?
Galxe is your digital passport for exploring the metaverse, exploring Web3. They have a bunch of quests and tasks and things to go do in the world of crypto. And once you go do those things, you get to log a little badge, a little gym badge, a little credential in your Web3 passport given to you by Galxe. So they are producing little things for you to go do, go and explore, the frontiers, if you will, to go and get some tasks done. And then you get to show the world that you did those tasks, that you are an actual frontier explorer. And, surface area for other opportunities, if you will. And so there is a link in the show notes to go get your Web3 passport from Galxe, and you can start exploring different parts, different Optimism, Arbitrum, wherever people want you to go explore. You can get paid to explore, or at least get a badge, sort of like a POAP, to go and explore the metaverse.
Yeah, some of these campaigns, as it were, they have rewards on the other side. So if you are a gold hunter, you can go check out those rewards. Also, that passport you're mentioning, David, that's actually a soul-bound token, which is pretty neat. I love these experiments with identity on chain using a soul-bound token for this. So go check out the link in the show notes.
Don't trigger Evan McMullen too hard.
Just a little hard. It's fine. That's Galxe.com/passport to get to that. GALXE.com is the URL. So Galxe spelled GALXE. David, let's get to markets. Bitcoin this week, how we doing?
It's down. It's down a solid 9%. So started the week at 20,200, ending the week at 18,400. Oof.
Down week, sad music. Okay, how about ETH down as well?
Yeah, down a little bit more, down 10.5%. Started the week at 1370, ending the week where we are now at 1240, 1220-ish, give or take.
David, do you think we're going to dip on ETH below 1,000 again?
I mean, it's certainly in the cards. It's certainly in the cards for sure.
It's certainly in the cards. Not going to say no, not going to say yes. I'm veering towards yes on that.
I mean, if we roll back at the last bear market, we hit $80 and then we hit like $92 and then we hit like $95 across like 18 months of time.
What's our low right now on ETH?
I think it's like 870. Yeah.
And that was a quick spike.
And your boy bought 897. So that is the best bottom tick I have ever done.
All right, so David timed the market really well at that time, but maybe we'll be below that.
For now.
I can't wait to beat David and buy 800. And what'd you buy?
Shush. Get out of here.
What'd you buy? 800. So I'll do
897. You're gonna set your limit orders for 896. Yeah.
Yes.
Well, I'm gonna set my limit orders for 895.
And on we go. And this is how we end up with no cash.
This
and all
is how you get price discovery.
I guess we're laughing about this, but it is a pretty steep bear market. I mean, like we are like at these prices, we are below the all-time high of the last cycle, which was like 1440, something like that. So we'll talk about why this might be the case. It's all screaming macro to me. How about the ETH to Bitcoin ratio? We down on that too?
Yeah, down a little bit, 2.5% down to 0.663.
And how's the crypto market cap holding up overall?
No longer being measured in the trillions. We are now at $934 billion. So well below $1 trillion market cap.
We lost our T status. We back to the B's.
Yeah,
All right, well, let's talk about macro, okay? Because this is the cause
Why
of
is
some
this
of our
all
problems.
happening? Yeah.
Why is this happening to us? Why us right now? Of course, crypto goes in cycles. But I think one of the catalysts and the things that are like preventing some of the crypto markets from rising again is uncertainty in macro. And boy, there's a lot of uncertainty these days. The big news this week was the CPI number. That is the September inflation report just came out. And David, the numbers are higher than expectations. The CPI, Consumer Price Index, rose 8.2% in the year that is annualized through September. I think expectations were hoping for 8.0, 8.1, so a little bit higher on that. And we're still in the 8 range, David. So not good. I guess just to recap, in August, we were CPI of 8.3%. That's annualized, of course. In July, 8.5%. In June, 9.1%. So from June to September, from an annualized perspective, we went from 9.1% to 8.2%. So we're still down, but we're not down as much as some analysts and I think the market was hoping for and expecting. And so, do you know what this means, David? Powell,
numbers go down.
Numbers go down, and also Powell wants one number to go up, which is the interest rate. And so the next Fed meeting is November 2nd. The market's anticipating another 0.75 basis point hike. So that is definitely coming down the pike for us. And
I mean, this is just simply like rate hikes will continue until inflation comes down, right? So this is like pretty straightforward, I'd say.
The beatings will continue until morale improves.
Yeah,
and so we've got some more beatings to go through from the Fed. It's an interesting question. I think a question that we want to bring some macro folks here to answer on Bankless, which is like, is this actually effective? Can you break the back of inflation by raising rates? I mean, the story, the narrative keeps going back to like Volcker, the Fed chair of the 1980s, who allegedly broke the back of inflation. Is that really what did it? Or conditions different? Are there other factors at play? I would love to get in a conversation with somebody on the macro side about whether this strategy is actually effective. But in the meanwhile, David, you could see the sell-off event when those numbers
are some large
retire.
down candles.
Yeah.
Look at that. This is the S&P 500, gold, Bitcoin, and Euro all just tanking in a single candle as soon as this report came out.
Exactly.
So global correlation. Yeah, this is one of those moments where like correlations all go to 1 when times are bad. Yeah, that's exactly what this looks like.
Yeah, that's what's happening. But I will tell you one thing, which is kind of interesting, is how crypto is faring relative to traditional markets. Here's kind of one stat. So after the CPI numbers came in, the U.S. 30-year bonds were down 2.5%, as you might expect. So bonds go down. But also ETH was down 2.5%. It was interesting. Like the risky asset, you'd expect ETH to go down by 2.5% or a lot more. It was down the same amount as bonds. Bonds are supposed to be the stable asset, and they're not performing as the stable asset in this market. So I start to wonder if have crypto markets bottomed? Is prices and some of the volatility shifting to more of the traditional markets? That could be what's happening.
My take here is that the hot air has already left the crypto industry. And so when macro goes down, we're also going to go down with it, but we're not going to go down in an outsized way. Like we went down in an outsized way from January to May of 2022, and then everyone got liquidated. And now we've kind of like found some sort of floor-ish, And as that floor lowers because of macro, we'll follow that floor down, but we're not going to like puncture through that floor in the same way that we did in the first half of this year. That's my take.
I largely agree with that. I think crypto already took its lickings and got beaten down, and now traditional markets are taking theirs. This is a tweet from Zero.
People are underappreciating the fact that we do not have another 3 hours capital like leverage event. And like maybe we do, because you don't really know if you have one of those or not, so it's kind of impossible to claim. But I don't know, man. Like if it would have happened last time, like we already did that.
Yeah,
I can't imagine there's a second one.
The things that are still standing are now on much more firm, solid foundation. This is a tweet from Zero Hedge. The Fed finally did it. They broke the market. The Dow Jones, which is of course the 30 largest industrial stocks on the planet, is now officially more volatile than crypto. This is a volatility index of Dow Jones and crypto versus US dollars. And so the stock market now performing with more volatility than crypto. That lends a bit more credibility to what you just said, I think, David.
Yeah, and this is a theme that I have been trying to just get into people's heads, because I think it's the right theme. Where and I've said this in a number of different capacities, where crypto is becoming more and more suitable for mainstream, while the mainstream world is needing crypto more and more and more. And this is related to like our Web 2 versus Web 3 apps, like Facebook algorithms, rage algorithms are like pushing us into like, oh, I kind of understand why we need Web 3 a little bit better. Like there's an adoption story here. The other time I've articulated this is that like the normal world is getting more chaotic as crypto is becoming more stable. And so this is me taking a victory lap, Ryan. Like when the Dow Jones is more volatile than Bitcoin, like this is the old world's getting more chaotic and crypto's getting more stable, and this is going to be one of the great. If it's like the Benjamin Button like meme, like we were now like crossing, and now crypto is like the stable one. Yeah, exactly.
Yeah. I totally agree with that. And I think what you're saying is the victory lap is not that you're happy the Dow Jones is going down, but you're kind of saying like you predicted that. All the naysayers who said, look, crypto is too volatile for mainstream. Like we've long said, people in crypto have long said, just wait. The whole world's getting more volatile, and that volatility is coming to you as well. And crypto is just a bit more of an honest market in terms of pricing that in early. And I think that is exactly what's happening. This is another tweet from Jim Bianco. This is the early 2020 pre-pandemic peak in the S&P 500 was 3,393. As I write, and he's writing October 13th, so this is on a Thursday. As I write, the S&P 500 is 3,493, 100 points away from erasing the entire post-pandemic bull market. We just erased that entire pandemic bull market, all of the money printing that went into stocks. It's gone now. We're back to where we were in early 2020. That's pretty astounding when you think about it that way.
Yeah, that is quite astounding. And it's also worth noting that in early 2020, Ether was $100 and Bitcoin was like $4,000 or $5,000. And so like crypto has made significant strides in the same time that the legacy markets has just gone full circle.
Yes. And despite it, of course, if we're looking at now the speed of the US interest hikes, look at this, 2022, the fastest speed at which the Fed has ever increased interest hikes, at least ever in kind of like modern history, it seems like. So they are on a tear to increase interest rates and no signs of stopping yet. We'll see if something breaks before they do. David, meanwhile, on the crypto monetary policy side of things, ETH went ultrasound last week. Talk about that for a minute.
Yeah, so last week, since the merge, we had issued 13,000 Ether, about 13,500 Ether. So last week, the new post-merge Ether issuance was 13,000. Today, 7-8 days later, the post-merge Ether issuance is 7,100. We have burned about 6,000 Ether in the last 7 days. And so where we have been previously up to last week, we were inflationary. The last 7 days has been extremely deflationary. We've almost cut out 50% of all issuance in the last 7 days. And this goes back to what I was saying last week. It's easier to burn Ether than it is to issue it. And you can recover a significant amount of Ether issuance in a short amount of time. So we've like taken 3 weeks of issuance and like deleted it inside of 1 week. Previously, I think the issuance rate of Ether, the inflation rate, it was 0.22% up until at the very peak. We are now down to 0.08% since the merge. And so this is really cool. This is really, really cool. The less cool thing about it is, okay, why is this happening? Why are gas prices like sustaining 30 Gwei and sometimes getting up to 100 again? It's because of a Ponzi.
Zen crypto.
Zen crypto thing. Yeah, I actually haven't looked into it myself, but this was the discussion at DevCon, and so I'm kind of regurgitating what I heard. Is apparently this is like the new Ponzi thing. But this also goes back to my other take that Ether is the index of Ethereum, and you don't have to buy every single token to have exposure to Ethereum. Maybe this Ponzi just comes and goes.
Every single token.
Definitely not. Yeah, maybe this Ponzi comes and goes, but it's burnt for almost 5,000 Ether along the way, and so yeah. Cool.
Yeah, it is really cool.
Generalized exposure to Ponzi's nice.
Well, this is and other things among them, but like this is an example. So ETH was ultrasound on the week. It's not ultrasound overall since the merge, but it could easily like you get another week like this, and it basically is. And what we're talking about, of course, is again a 94% issuance reduction post merge, and that has not been priced in. From the markets at all. And the reason is because like during bear markets like these, demand simply vanishes for Ether as an asset. Everyone's kind of scared, so demand vanishes. But in the backdrop, a lot of supply is getting eliminated as well. And so once that demand recovers, I would expect to see some like rocket ships like back up because we have much less supply to work with and there's much less availability.
I think that's the right take. I think Ether burned, Ether removed from the market, I don't think does too much when prices go down. Like I don't think this ETH burn is going to save Ether from setting new lows.
It's not.
But once demand comes back, like you said, it becomes the upside becomes highly sensitive, and so it is easy to recover price. I think as soon as there's any amount of like meaningful new net new buying of ETH. I think that's right.
Guys, we have a lot more coming up in the roll-up. David's going to get to all of the DevCon announcements that he saw well in Bogota. And also, we're going to talk about the Binance Smart Chain pause. Why did it pause? What happened? Did they roll back the chain? Talk all about that. And then Hoffman versus Janet Yellen, the fight of the century. It's coming to a court near you. David can't talk about it, but I can, and I'm going to.
How convenient.
All of this and more coming after we talk about these fantastic sponsors that made this episode possible.
If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network. The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3 ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started.
A lot of big announcements coming at DevCon, mostly on the protocol layer of things, as we were talking about in the intro. David, you want to take us through a few of these announcements?
Yeah, 100%, because they're really cool stuff. This is the building being expressed here at DevCon. So we'll start with this one. This is Liam on Twitter. Last night, and he's from the Scroll team. Last night, we officially announced the upgraded version of our zkEVM testnet over at Scroll. This is a huge milestone for both the Scroll team and incredibly early community. Let's break down what this upgrade means for developers and users, and there is a tweet thread in the show notes if you want to learn more. Scroll's zkEVM testnet is debuted, and so if that is interesting to you as a developer or a tinkerer, that is now something that you can go play with. And so congratulations to the Scroll team. This is definitely, the ZK rollups are definitely a very hot conversation here in Bogota and overall in the crypto space. And I mean, this is Scroll, between Scroll, Polygon, and zkSync. This is like one of the big three of the zkEVM teams. And now we got a zkEVM on testnet ready to go.
Wouldn't you also add Starkware maybe as a fourth? Is it probably
no, Starkware is not a zkEVM. They have
not a zkEVM, because they don't actually have an EVM because you have to kind of write it in Cairo.
Mm-hmm.
Is this why?
Yes, correct.
Cairo?
Yeah, they are a non-EVM compatible ZK rollup. Yes, correct.
This is actually coming faster than I thought. So
super fast. Yes,
big move for Scroll, and they are purporting to be the most EVM equivalent of them all. Of course,
yes, that is their competitive advantage. That is their angle. They are trying to be as EVM equivalent as possible, beyond EVM compatibility. And so there is a fight for EVM equivalence. Optimism and Arbitrum are fighting over EVM equivalence. Scroll and Polygon are fighting over EVM equivalence. zkSync is specifically one firm in the EVM compatible camp. That is their competitive advantage, a little bit in the same angle as why Starkware wanted Cairo, a little bit highly optimized language or just some kind of tinkering. But zkSync is a little bit in the middle. Definitely want to maintain EVM compatibility, but they think that they can make optimizations that are better than the zkEVM or an EVM equivalent rollup. So that's their territory.
Well, speaking of Arbitrum, which you just mentioned, they had a big announcement too. What are they talking about?
Yeah, this is huge. They have acquired Prismatic Labs, Prysm, a layer 1 client. We have a layer 2 optimistic rollup acquired a layer 1 client team, which is crazy. No one really thought that you could really do this. And so this has caused a ton of conversations in the space as to what this actually means. But Prysm is the most used client in Ethereum, one of the few people, the first teams to come out and start building an ETH2 client, which is now what we call Prysm, and that got acquired by Arbitrum. So Preston Van Loon, Raul, all of the Prysm team, I think there's 10 or 15 of them ish, are now under the Arbitrum umbrella, and they are of course going to continue working on Prysm, but now Prysm is just a product of Arbitrum.
This is kind of cool in that it kind of means funding secured, right?
Yes.
Business model secured for the team that's building a crucial client. And obviously this is very good for Arbitrum, and I believe Arbitrum when they say they're going to continue to support this and continue to maintain its credible neutrality. I think there have been some concerns about this though. Is what happens if a layer 2 team kind of maybe tries to bias the layer 1 client in some way, or is this unfair to other layer 2? So there's been some of that. I don't know what to make of that. We don't necessarily need to get into the arguments, but what I will say is the feedback that I've heard from Raul and Preston Van Loon and others is they're just excited about this. And I know those individuals are here for the right reasons, and I don't think they'd be excited unless they had a path to preserve the values of Ethereum that they really care about. So I'm pretty optimistic about this overall.
I actually had the opportunity, I was in a cab with Preston for 20 minutes where we kind of talked about this. So I can regurgitate some takes here. I'm going to see if I can get him into an actual interview right after this over at DevCon. But we were also hosting Preston and Steven from Arbitrum and Prismatic on Tuesday, this next Tuesday for State of the Nation to talk all about this. But Preston, one of the big reasons why he's so excited about this and then the whole team is him and Raul were running a company, right? They were managing the grants incoming from the EF where they were previously getting funding for, and they were doing HR and paying salaries and normal company stuff. But they're builders, they just want to tinker. And so now that they are being put under the larger Arbitrum umbrella. Like he doesn't have to like do any of the business operation stuff, which I think he like, if you're a builder, you just don't really like to do that. Also, like salaries are going up because they're going from grants to like EF grants to, again, under the Arbitrum umbrella. And I mean, they also get to just like be financially compensated for all of their hard work, which, grants aren't a business model. So everyone's like super happy about it over on the Prysm team. Mm-hmm.
That's cool. Look, and if worst case scenario, they're not going to go evil, but if they ever went evil, it's open source code. Some other team could fork it, take it, and run with it. So I think that's a net win for the ecosystem. David, speaking of net wins, the makers of zkSync just launched their layer 3 testnet. Now, Steve from zkSync was talking all about layer 3 on a State of the Nation that we recorded with him a couple of episodes ago, and they're already on testnet for this. What is this announcement telling us?
Yeah, so zkSync's mainnet is coming in like 20-ish days. We might actually be in the teens on that. So zkSync is actually much further along than the other two zkEVM teams, Scroll and Polygon. So their mainnet, their zkEVM mainnet is coming very soon. And so they have, their announcement today is that their layer 3 testnets, which are their app chains, their hyper chains, whatever you want to call them, their testnets for layer 3s is now going live. So they are like a decent step ahead of the other layer 2 teams because they are now working on their layer 3s. This is the same conversation as to keeping DYDX on Ethereum. DYDX had to leave Ethereum because they wanted to produce their own app-specific chain on Cosmos because layer 3s were not ready yet inside the Ethereum ecosystem. And this layer 3 testnet is that what would have been a solution for DYDX. And so they're calling it Pathfinder. And so this is now whatever it means to have a layer 3 testnet. I'm not too sure, but it is now available for you.
So another big announcement from Polygon as well, which we weren't really sure when their public testnet for the Polygon zkEVM would go live. And it looks like it just went live at DevCon. So while zkSync is close to shipping on mainnet, it'll be a guarded release, by the way. It's a mainnet without any apps. It'll be kind of like for
developers
zkSync
first
anyway.
Mainnet,
Developers first. So we won't be able to use it for a while until they kind of release the floodgates. But meanwhile, from Polygon zkEVM, their testnet just went live as well. Any takes on this announcement?
Again, this is why the meta right now is the zkEVM. And Vitalik at Rollup Day, which was a rollup themed conference, one-day conference hosted by Scroll, Vitalik gave his presentation and talked about just like, the zk teams have really astounded.
They're shipping.
They're shipping hard. Yeah, he was giving this narrative about how the zkEVM, the zk rollups were like going to be here in like 2025 to 2030, like sometime around there. But bam, no, they actually came in 2022. And he said it's the one time that you actually see development is super accelerated beyond the merge was delayed, sharding's not even here yet. Everything about Ethereum has been delayed except for the zkEVM teams. And you can see this all happening all at once at DevCon. Everyone saved their announcements to DevCon. The zkEVMs are basically here. And so while, we're all frustrated that like Ethereum development is slow, even though cool, now we have the merge, so I'm not really going to complain too much. The zk layer 2s are here and they are super exciting. It's not just about cheap and fast transaction fees, Ryan. There's so much new doors that are opened up on a zk rollup. More content on that in the overall Bankless ecosystem coming soon.
Well, we at Bankless are cheering all of these projects on. Way to go, everyone.
Quick disclaimer on all of these projects that we just mentioned. Ryan and I are investors in Scroll. Ryan, I believe, is an investor in Arbitrum. We are both advisors to zkSync, and Ryan is an advisor to Polygon. So we are very, very involved in this layer 2 ecosystem. And so those are those disclaimers.
And also David holds some ETH. He's been known to hold a little bit of ETH.
Also really related to Ether, I also hold ETH. Yes.
Bullish on ETH. Disclaimers out. Kevin Owocki, he tweets this. I'm pleased to announce the launch of Supermodular XYZ. We are a venture studio that builds regen Web3 projects, often on top of adjacent to Gitcoin's protocols. What is this from Kevin Owocki? What is Supermodular? This was announced at DevCon.
Yeah, so Kevin Owocki, the founder, former CEO of Gitcoin, Gitcoin is now a protocol. It is now a DAO. It is on its own. And he's largely stepped back from the DAO, kind of in the same way Satoshi stepped back from Bitcoin and Vitalik has stepped back from like
He's
writing
even made
code.
time for a podcast, hasn't he?
He's even made time for the Green Pill podcast. And so Gitcoin is up and running and it just chugging along. And so now Kevin, the perma builder that he is, has founded a centralized company that exists on top of the Gitcoin protocol. So I think Supermodular, the way to explain it simply, is like the consensus for Gitcoin. A software studio that builds on top of the Gitcoin protocol. So Kevin Owocki just can't stop building. A founder and CEO yet again, back building out something centralized on top of the decentralized protocol that he helps steward. So just Kevin Owocki is just like, well done, sir. And I also think this is just a great model of something that I think we will see, and we have seen before, and we will see again, of founders building something, letting it become decentralized, and then building a centralized company on top of that decentralized thing. This is what we've seen with Hayden Adams and Uniswap. So Hayden Adams built Uniswap, released it to the wild. Now the Uniswap DAO is in control of Uniswap, and now he's the CEO of Uniswap Labs, a software company that is building on Uniswap. And so I think this model is going to be something that we're going to see over and over and over again throughout into the future.
I totally agree, and I think it's a great model. All right. Well, meanwhile, this is everything that's going on DevCon. I think you've got some more stuff to say about DevCon a little bit later, but maybe we should talk about another event that happened this week, and that was on the Binance chain. So, sorry, the BNB chain. I think they've rebranded this. This is not the Binance chain. Here's a tweet from BNB chain, the Twitter account. Due to irregular activity, we're temporarily pausing BSC. We apologize for the inconvenience. We'll provide further updates here. Thank you for your patience and understanding. That tweet was put out on October 6th. Was that last Friday, David?
Yes, I believe that's right. And then they also follow up that tweet to say, to confirm, we have suspended Binance Smart Chain after having determined a potential exploit. All systems are now contained, and we are immediately investigating the potential vulnerability. We know the community will assist and help freeze any transfers. All funds are safe. Interesting, because all funds were definitely not safe, Ryan.
All funds were not safe. Okay, so first of all, we'll talk about the exploit itself and what that was. But let me just park this because we'll come back to it later. How bizarre is it that a Twitter account representing the chain itself can tweet like, "Hey, something went wrong. We just paused it." It sounds an awful lot like a centralized exchange to me. Like you'd expect this from Coinbase. You'd expect this from FTX. Something happened. We're pausing things. But on a blockchain, a little bit weird. Like the Ethereum Foundation, we're pausing the Ethereum chain because, I don't know, someone hacked their own inside chain. Like, what the hell? You're not supposed to be able to pause a chain. But let's talk about what actually happened. Here's an article from Decrypt.
Decrypt reports that $566 million of BNB tokens were stolen from a bridge. So this was a bridge exploit, a bridge attack, and then they froze the chain. And so once the attacker got their hands on an extremely large sum of money, they started to transfer it out as fast as they could in all the different other bridges. So they bridged out to Arbitrum. I think they also bridged out to Optimism. They bridged out to Ethereum. But then they froze the chain. So the hacker managed to get away with $110 million, and then about $430 million was frozen and now is back in the custody of the Binance Smart Chain operators. And so the freezing of the chain did save $430 million. But the hacker has like $110 million of various crypto assets across the space because they bridged out. And so, oof.
Yeah, this is a summary of the hack. So since the BNB chain was suspended, the $430 million on it cannot be transferred any further. And this tweet goes through kind of all the details. We'll include that in the show notes. This is from Sam CZ's son, who kind of goes over the hack and what actually happened. And it appears, David, that the summary here is something went wrong. There was a bug in the bridge, the Binance bridge itself. So there's a bug in the way that the Binance bridge verified proofs, which could have allowed any attacker to forge arbitrary messages.
I went through the Sam Z Sun thread, and it was an extremely sophisticated bug. It was, I generally don't understand.
Hard to find bug.
It's a very hard to find bug, hard to reproduce. think this bug has been in Binance Smart Chain since the beginning, which is kind of the crazier thing. So yeah, this is like top.
It's been in the bridge specifically.
Yes, it's been in the bridge. It is a 10 out of 10 complexity level bug. So wow, crazy.
So chain halted, everything frozen. The good news is, if you think this kind of thing is good news, is that they were able to get back a lot of the funds. I think. How much of the funds was Binance able to kind of like recover or freeze, or was the hacker prevented from getting away with?
About a little over $430 million. Yeah. So the hacker got away with 110 million. 110 million though. That's a large amount.
Yeah. So what do you think about this? I mean, there's some people outside of crypto looking at this and being like, well, I'm glad the hacker didn't get away. Are you guys crazy? The cops were on the beat. They froze the chain. They stopped the hacker from getting what? Do you want the hacker to get away with like half a million dollars? And who knows who the hacker actually is, right? The last time on the Ronin sidechain turned out to be a state apparatus of North Korea. Do you want these types of events to happen? And here you are on Bankless saying like, oh, it's out of character of crypto values for a chain to be able to layer one chain to be able to freeze things. Well, are you sure about that? Do the ends justify the means in this case? What's your take with that argument?
Yeah, I mean, I don't really think this surprises many people. Binance Smart Chain, there's that meme about like, the CAPTCHA of like, select all the fire hydrants. And then there's the meme of like, select all of the Binance Smart Chain validators. And it's just CZ's face like 9 times. Like we know that this is the state of Binance Smart Chain. This isn't really surprising to anyone. At least I don't.
That it's centralized. That they have the ability to freeze. That they will freeze if an event like this happens. You're saying no one was really surprised. We all knew this.
Yeah, and so like I think that has been in the social contract of Binance Smart Chain. And so when we say like, yeah, this is against crypto values. Well, yes, in one way, it's definitely against Bitcoin and Ethereum values. I don't think it's necessarily against Binance Smart Chain's values. There's a certain social contract that Binance Smart Chain has, and I think there's no secret that it is centralized and like plausible. And the fact that we have Ethereum, and again, Binance Smart Chain is an EVM fork of Ethereum, and then it's just juiced up Geth, so it goes super fast. We have the irreversible, immutable, decentralized version of that. It's called Ethereum, and so. We don't need
BNB to be that.
Yeah, we have that option. So if you would like to express those bankless values, you probably transact on Ethereum. If you prefer the more like a different level of settlement assurances in the sense that you trust that Binance Smart Chain operators like CZ will be benevolent and do things that will prevent hacking and loss of funds and return. Like if you're an investor, and you see like Binance Smart Chain halted and gave money back to investors that were innocent, that might be compelling to you for some certain set of people. And so my take is that because we have Ethereum, I don't really care so much about Binance doing this. I would be much more cautious and much more like reserved if like they were like freezing funds of like the Uyghurs because the Chinese government told them to. That's a different story.
Well, but that could happen next, right? To be fair, now you have these buttons that centralized validators can press and have the ability to freeze. You'd expect that they wouldn't just be used for hack type situations, right? But largely, I agree with you. I think what this does though is it really reveals that. BNB chain is a separate type of platform, separate type of application versus something like Bitcoin or Ethereum, right? And so it is a bit more like a bank. It is a bit more like kind of fintech. And I actually don't see a lot of difference between something like BNB chain and an actual like bank with a set of open APIs that you can build on top of. It's very similar. It veers in that direction. It's kind of like fintech. Where I have a problem is when people mistakenly think that they're getting into like DeFi when or like that this thing is built on a permissionless base layer, and really what you're kind of building it is on a a set of validators, kind of like a bank API. That's where I have a little bit of the issue when it kind of masquerades or cloaks itself as being decentralized, and it's not nearly as decentralized as something like Ethereum. You could build on top of it. Maybe it's permissionless. Maybe it has some open APIs, but you can't put it in the same category as a Bitcoin or Ethereum.
Right, and you touched on it just there, but just to drive that point home, and I guess I'm defending CZ today. It's permissionless to access. It's permissionless to build on. It's like permissionless by default, but like on a bank, for example, you can only do certain things and you can't do anything else. On Binance Smart Chain, you can do whatever you want with the potential that CZ will stop you from doing that later. But you can enter Binance Smart Chain and do things freely in the same way you can with Ethereum. You just know that like, hey, you might get stopped after the fact. Where a bank stops you before the fact, Binance Smart Chain stops you after the fact, and then Ethereum doesn't stop you at all. So like it splits the difference between Ethereum and a bank.
Well, what's interesting to me is like some people will say, well, David Ryan, that's what users want. I mean, they want some level of protection. And like, I hear that and I agree with you. And I would say if you're a user that wants that, go use Binance Chain. But what I actually think is that the true users of layer 1 block space aren't individuals like you, myself, or like bankless listeners right now. They're actually other chains. And so the true users of layer 1 block space are going to be the zkEVMs, the Optimisms, the Arbitrums, right? And the question for these chains is, what chain are you going to build on top of? Are you going to build on top of a chain where a small set of validators can like freeze things? Well, if you are, then you are completely giving up your sovereignty. You're not building on a credibly neutral, censorship resistant base layer, right? And so that is more kind of what I think. If you're a user, go use whatever chain that makes sense to you, like recognize these trade-offs. But if you're a chain, which is where the big block space consumers are going to be in the future, you sure as hell aren't going to build on something like BNB versus something that is much more immutable and has higher security guarantees.
Yeah, basically what you're saying is that these choices, the specific social contract of Binance Smart Chain puts a limit as to like how much value can this thing actually host? Like what is the total addressable market? The total addressable market of pure, strong immutability and strong settlement assurances is much larger than weak settlement assurances. People can trust Ethereum much more. And that's fine. And that's the same take that I have about Solana and why Solana needs to stop going down because of settlement assurances. You need to be able to have assurances that your value is secured. And Ethereum has that market pretty well cornered. I will say like Ethereum, like if you're using Ethereum, I would consider you a user. If you're using Binance Smart Chain, I would consider you a customer. I would use semantically.
Oh, that's
define,
interesting.
Yeah, I would semantically define it like that. Yeah.
Yeah, I kind of like that distinction. I think it draws the right mental models in people's mind. All right, speaking of distinction, speaking of mental models, actually, there's no segue here at all. I'm just going to say it. David is suing the Treasury, guys. All right, I'm gonna kind of lead this story. This is a post from the block. Coincenter sues Treasury over Tornado Cash sanctions. Of course, you know Coincenter. They are a crypto-friendly legal group, lobbyist group based in DC. We've talked about them often on Bankless. We've had folks like Jerry Brito and Peter from Coincenter on the podcast to explain what's going on in DC. And guess whose name is in this article? Guess whose name is on the lawsuit? My own co-host, if I can find it. David Hoffman. Where are you? There he is. David Hoffman says, and David Hoffman, a digital asset manager. There you go. digital asset manager, you. But let me read what's going on here. This is from Jerry Brito from Coincenter. He is the lead at Coincenter. Today, Coincenter filed suit in federal district court against OFAC. That is a branch of the Treasury, challenging its authority to sanction Tornado Cash immutable smart contracts. You guys remember that Tornado Cash was sanctioned, so no U.S. citizen can legally use Tornado Cash, a privacy mixer on-chain on Ethereum. Jerry goes on, not only are we fighting for privacy rights, but if this precedent is allowed to stand, OFAC could add entire protocols like Bitcoin or Ethereum to the sanctions list in the future, thus immediately banning them without any public process whatsoever. This can't go unchallenged. Can you imagine that? The slippery slope here. We intend to win this challenge, even if it's necessary to go to the Supreme Court, and we'll keep you posted as the case unfolds. You can read more about our suit here. A big thank you to our co-plaintiffs, Patrick O'Sullivan, David Hoffman, and another Twitter handle here. And this is the actual filing itself. This is the first page on it. Listed as plaintiffs are Coincenter, Patrick O'Sullivan, John Doe, and David Hoffman as plaintiffs versus Janet Yellen in her official capacity as Secretary of Treasury, Department of the Treasury, and it goes on. And the entire complaint is listed here. I might read some sections on it, but David, I know you can't say everything about this case as a co-plaintiff, but what can you tell us? Why did you get involved in this? And what specifically is your role as a co-plaintiff? Like, what are you filing this complaint against?
So I'm suing Janet Yellen and Treasury because I received a dusting from Tornado Cash to davidhoffman.eth. I don't know who sent it to me. Permissionless Ethereum sent me money that is now OFAC against OFAC sanctions. And so as a result of that, because somebody has sent it to my public address, which I couldn't prevent them from doing that, I now have to, I had to file a report with OFAC saying, hey, somebody did this to me. I had to take time out of my day, file this stupid report, like do all these stupid things. And then every single year, Ryan, for the rest of my life, I have to do it again. And so next year, I'm going to have to file the same report saying, hey, still have this illegal money. I still control it. It's still in my wallet. I'm not a criminal. And I have to do that next year. And then I have to do that the year after that. And then I have to do it the year after that. And the year after that for the rest of my life. And the thing is, Ryan, if somebody sends me ETH from Tornado Cash again, I have to do that again every single time. And so I'll file 2 reports and I'll file 3 reports. And so like the Treasury, as a result of their in my mind, illegal listing of a smart contract, which I can't do in my mind, in my opinion, I have to spend my life, my time, doing this stupid bureaucracy stuff that I don't think I should have to do. And so this is an injury, and I'm suing Janet Yellen and the Treasury.
It's not only that, as I understand it, David, it's unclear whether those that were dusted, yourself included, but also like some celebrities, right? Jimmy Fallon, I think, was dusted. It's unclear.
Shaquille O'Neal.
It's Shaquille O'Neal. It's you're fighting for all of them. You're fighting for Shaq. You're fighting for Jimmy Fallon.
I don't want them to have to waste their time either.
It's not just wasting your time. I know that's a part of it, but it's also, as I understand it, Treasury has not said whether they could legally, it seems like Treasury's stance is you are breaking the law even by receiving this. And so if you file, then you are a good citizen. Thank you very much. But they're only committing to deprioritize charging you for this illegal action that you've undertaken. And what is the illegal action? Receiving some dust that somebody sent you and these other individuals without their permission from Tornado Cash. So this is awesome. I am so glad that Coincenter is stepping up here. David, it's awesome that you're doing this, man. Like, I appreciate it. We appreciate it. The bankless community appreciates it. It's bankless AF to take this to the court system. And I'm proud of you, dude. Like, this is really cool. I think this is a cool moment for crypto. By the way, I will say this isn't the only lawsuit that we have. So we have 2 irons in the fire as a crypto industry. So there's the Coinbase lawsuit that's going on in parallel. And then there's this one from Coincenter. And I think that the hope is we have 2 irons in the fire, 2 approaches. One of these either wins or it gets all the way to the Supreme Court and then something happens. And the big macro fight here is the question of whether an American citizen can have on-chain privacy or not. All right? And we have these rights on the internet. I want you to know, every time you use encrypted communication protocol like HTTPS or something like this, or you send encryption without a social media company spying on you or without the government spying on you, every time it's encrypted, we have that in our communication protocols, right? Are we going to, as a country in the US, allow citizens to have this in our value transfer digital protocols? That's what's at stake here. And if we lose this, as Jerry Brito was saying, we might lose the larger battle of having a censorship, making it, they could make it illegal to run an Ethereum validator in the US. for instance, right? That is kind of the slippery slope. Why? Because unless you're running an OFAC, OFAC sanction compliant ETH validator, you are maybe breaking the law, right? So we have to take this to the court system. It's a big, bold move. And I just want to say on the behalf of the whole bankless community, everyone in crypto, we appreciate it, man. And we're cheering you on. I know you can't talk about it very much more. The good news is I can. All right. So I'm going to be keeping the Bankless Nation updated a bit more. And in addition, guys, to cheering David on, what you can also do is donate to Coincenter, because they are funding all of the legal expenses to make this happen. David, as I understand, this is not coming out of your pocket, right? So they're funding this. They are representing, they're paying all the legal fees to take Janet Yellen and Treasury to court over this. Is that right?
Yeah, that's correct. Yeah, I could not do this without their support. So like, it's like David's face in the front, but it's entirely Coincenter in the back.
Coincenter Mullet?
Yeah, the Coincenter Mullet, yeah. So thank you, Coincenter, for all of the support and helping spearhead this. Coincenter.eth is where you can send money for if you would like to contribute. At DevCon, people, this went out, and so while I was walking around at DevCon, people were going up and, hey, like, congratulations on like the lawsuit. I'm like, oh, I guess congratulations. I guess.
But seriously, congratulations. And I think it's going to take all of us kind of standing up if we're going to be able to protect our digital rights in the 21st century here.
And a quick speed run through that. Remember that before Bitcoin episode that we did? Like cryptography was made available because of a series of lawsuits that individuals sued the government and won in court. And that is why we have cryptography. And now we're just
1980s, early 90s. It was on the back of giants that we actually have the rights that we have today.
And now we're doing it all over again, but now with cryptocurrency. So running it back.
Well, let's make history. All right, coming up next, guys, we got a lot going on, including a whole bunch of hacks that happened. October was hack month in crypto. Also, PayPal getting a little authoritarian. Also, PayPal is going to fine you $2,500 if you're politically incorrect, maybe because you said something on Twitter. We'll talk about that story. It's partially true. Partially, they've walked it back. And also, the SEC is coming after the Bored Apes of Yuga Labs. We'll talk about all of that and more when we get back. But first, we want to thank the sponsors that made this episode possible.
Arbitrum 1 is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on Arbitrum 1, producing flourishing DeFi and NFT ecosystems. With the recent addition of Arbitrum Nova, gaming and social dApps like Reddit are also now calling Arbitrum home. Both Arbitrum 1 and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. In all of my years in crypto, I have never been hacked, scammed, or lost money to a thief, and a lot of that credit goes to my Ledger hardware wallet. The Ledger Nano X and the Ledger Nano S Plus hardware wallets allow users like you and me to secure and manage all of our crypto assets and our NFTs, all with the security of storing users' private keys offline and out of reach from hackers. The Ledger Nano X is the perfect hardware wallet for managing your crypto and NFTs on the go because it connects to your phone with Bluetooth and has a nice big screen for easy transaction readings. Ledger has also upgraded the iconic Ledger Nano S and made the new Ledger Nano S device more DeFi and NFT friendly, making it the perfect hardware wallet for beginners. Ledger has truly maximized for both ease of use and security. So discover which Ledger device is best suited for your journey by going and visiting shop.ledger.com. Ryan, it is only the second week of October, yet we have hit all-time highs in hacks. So not necessarily good news, but so far October is the biggest month ever for hacks. $718 million across 11 different hacks. This year, there's been a little bit more than $3 billion across 125 hacks. And of course, it's always cross-chain bridges, which has always been the weakest link in this entire industry. It's accounting for 64% of this year's losses. So congratulations, October, for breaking the record of hacks. And just another quick shill of the Ethereum Layer 2 ecosystem. you eliminate bridges as much as possible in the layer 2
Kill
roadmap.
bridges.
You kill the bridges. And so cross-chain bridges, layer 1 to layer 1, side chains, they're the weak link. They're the reason why we have all these hacks. Optimism's superstructure, which is, or superchain, which we're going to talk about at some point in the future. zkSyncs, like hyperstructure, all of these like single circuit layer 2s are the bridged, minimized scaling ecosystems. And that's how we're going to eliminate all of these hacks. So again, that's why we're always bullish on these layer 2s. Anyways, congratulations to October for breaking records.
Yes, and not bullish on centralized bridges. Not bullish on bridges. This was another hack that happened this week. A DeFi trading platform called Mango just lost $100 million in a hack. That's included in those October numbers. And I think the hack here, David, was an Oracle attack of some sort. But what's crazy is...
oh my God, it's so crazy.
Yeah, okay. So why don't you read this out? So the hacker stole $100 million from this protocol, exploited some kind of like an Oracle attack where he pumped the price, and then through that exploit ran away with a bunch of money. And then he said he was sorry, and he posted to the governance forum, hey guys, please don't prosecute me. Why don't you read what this tweet is, David? Yeah,
so the hacker who stole a bunch of these Mango tokens posted a governance proposal to the hacker said, hey, I will pay back the DAO the certain like a significant amount of the money, like most of the money, 70 or 80%. And if the DAO agrees to not pursue legal action. And then, because the hacker owns all of the tokens, the hacker voted yes
to the governance proposal.
To his own governance proposal using the funds that he stole. I don't know.
Checkmate, Mango holders.
Is code law? I don't know, but oh my God, this is...
I don't think this kind of thing holds up.
I don't think this holds up in court.
What's the analog? I guess maybe I
have no clue, dude.
Go to Wells Fargo, steal a whole bunch of their money, steal a bunch of their shares, and then go to their shareholder meeting, and they're like, hey, don't prosecute me and I'll give you most of the money back. And then you vote.
Yes. Yeah. Like you somehow like steal all the certificates. And now I own Wells Fargo because I own their certificates, but you don't own them because you stole them. That doesn't work.
Yeah. Only Warren Buffett could, has the Wells Fargo shares to pull this off, I guess. I actually think there's a take here, and that is we got to get really serious about hacks, okay? So $3 billion this year in hacks. That's a lot. And the year's not even over, David. And do you notice when things started to turn ugly in the US from a regulation perspective? We're just talking about Tornado Cash. It happened after the $625 million Ronin sidechain hack. Do you remember that? And this was when North Korea allegedly... some attackers from North Korea made off with millions of dollars, and they pushed it through Tornado Cash. And this is when I feel like the U.S. popped its head up, and the defense apparatus of the U.S. said, we don't like this. This is like, against our national security interests to have these because what's happened is North Korea just got a new business model, and that business model is hacking crypto. So I want us, like, one of my thoughts here, one of my messages to crypto here, the industry, is we think we're playing with these digital NFTs and these experimental DeFi games, but this has actually moved beyond that. I think crypto has taken center stage in geopolitics, the geopolitical scene. That's what we've entered. We have nation states that are attacking protocols now. Not this guy from Mango. That was just... some guy.
That's a guy.
But in other cases, the Ronin sidechain. Who did the BNB chain hack? We don't know yet. And while I think this is inevitable, and I think it's progress, hacks really matter. I think we no longer get to say, it's going to happen. Hacks are going to happen. I think that's true, and I understand that's part of the experiment. But could you imagine a hack that was like 3% or 5% of all ETH supply, and it went in the hands of like a rogue nation state?
Right.
How is the U.S. national security apparatus going to react to that? It's going to increase pressure and suppress citizen freedoms as a result of that. So I guess my message here is we as an industry need to get really serious about defense and spend more resources on crypto security and preventing these kind of things moving forward.
Right. And again, it's one part, let's write better smart contracts. And it's another part is let's create systems that have less surface area for attack.
Yeah. Less bridges.
Yes. Less bridges. Bridges bad.
Bridges brat. Oh, speaking of bridges, here's a cross protocol, a bridge protocol. They just gave an airdrop. What's going on here?
It's different though. It's an Oracle bridge that lets you go from one secure bridge to another secure bridge. And again, like
it's not a multi-sig bridge.
It's not a multi-sig bridge. And when Optimism and zkSync have their perfect fraud proofs and they have their circuits down, like the Optimism superchain, like the many chains where there's 1,000 layer 3 chains, there's not a bridge there. There is a single circuit. There is no bridge. That is the cool thing about Optimism and all these layer 3s and app chains on the layer 2 thesis. The bridges are gone. And so when you use this across, which is this airdrop we're about to talk about, and you hop from one bridge to another, you're using a bridge, but you're only vulnerable in that one moment that you are using it, not persistently through all of time. And so anyways, sorry, ACX across has an airdrop. So if you've ever used across, perhaps multiple times, there's a different criteria for being eligible for the ACX token. But 1 billion tokens has been minted, and 125 million tokens will be distributed through an airdrop for the people who have contributed to across. I am not local to my wallet at the moment, so I don't know if I got it, but I'm a frequent acrosser, bridgeor. Hopper, whatever you want to call it, not Hopper because that's Hop. But I think I got this airdrop, so I'm going to go home and claim it as soon as I'm done with DevCon.
You guys, we'll include a link where you can check that. It's across.2/airdrop, and you can see if you're eligible for that. David, there was a ruckus on Twitter as well that poured out about PayPal censorship. And the first tweet I saw about this was from David Marcus, formerly Facebook. Now he's working on a Bitcoin Lightning project. I believe he used to work at PayPal too. He's like an executive at PayPal. And this is as a result of PayPal issuing new terms of service for PayPal users. David Marcus says this: "It's hard for me to openly criticize a company I used to love and gave so much to, but PayPal's new terms of service goes against everything I believe in. A private company now gets to decide to take your money if you say something they disagree with. Insanity." And he links to a post that has now been taken down. But the post from PayPal explicitly stated that they plan to target anyone who is sending, posting, publication of any messages, content, or materials that, quote, promote disinformation. And how would they do this? The company, PayPal, would just deduct $2,500 from your PayPal account if they deemed you were in violation. Okay, so PayPal has since backtracked this, has called it a mistake. It's not clear how these terms actually came to be and like why they were published, but they're distancing themselves from this and they are backtracking from it. Here's a headline from Fortune. PayPal tells users it will fine them $2,500 for misinformation, then backtracks immediately. And of course, you know, there is a take here that maybe PayPal genuinely made a mistake. Who knows how this language got in? You know, it's hard to rationalize an explanation for how this could be accidental, but maybe some internal conversation that they never wanted to get out, something like this. I guess the devil's advocate take on that is, well, maybe they were just like floating this idea and hoping it would go unnoticed, and there was such a reaction from the entire ecosystem, not just crypto, but outside of it to this, that they decided to withdraw and detract. But the big concern here is obviously, imagine a bank account like PayPal, digital account. You say something on Twitter. Maybe I don't like the fact that you're suing Treasury, David, and I'm PayPal, and it's against my policy, or maybe it's you tweet something and it's quote unquote misinformation. I can then just shut down your account. I can take money out of your account.
Hey, we don't
fine?
service people who sue the government. Like, could you imagine?
Why not? Mm-hmm. Right? Like, you just don't really know where this kind of things ends. What do you think about this? Is this a tinfoil hat conspiracy, or do you think that there's something here?
I'm much less gracious than this, and I think that it's actually quite obvious that like somebody chose that number. That number is specific. Somebody said, you know what we should do? Like, we should fine people $2,500. The fact that number is explicit, it's not that like there's this detail of like PayPal reserves the right to deduct funds from your account if you say something like bad or something, maybe or terrorist, I don't know. But like somebody had to choose $2,500. So somebody wrote that number down and said, this is the amount of money that we are going to deduct from your account if under our discretion, like
For
doesn't matter
misinformation
for
spreading.
whatever, yeah. And the reason why this is, so there's that take, but also like we know the world of payments is just a huge era of censorship. This is what like Amin Soleimani has been doing with like payment channels and bank chain. So like MasterCard, Visa, they won't support like sex work, for example. That is censorship.
Marijuana industry is the same.
Exactly.
Bankless has been kicked out of bank accounts.
Right.
Bank of America, we were kicked out of Bank of America for actually transferring money to Coinbase.
Right.
And this happens.
Yeah. And so we know the payments industry is ripe with censorship. I don't know like why it's so much, but it's like you can't run like a sex work company or like a pot company without getting censored. And so this is part of like the big story of like why we need permissionless payment systems, because you don't want to get debanked, deplatformed.
Yeah, and I think they are right now advertising crypto for us, and this is why we need to go bankless, of course. By the way, another reason to go bankless is to add insult to injury, David. You know the Celsius hacks. A lot of people with deposits in Celsius lost a heck of a lot of money, myself included, RIP. It seems like they also exposed all Celsius users to a data leak. Okay.
Insane,
and
dude.
This came about in the court system, some court documents that were leaked that basically doxed the names. Because, of course, with Celsius, every account is AML KYC, so they have the identity and the amount of money individual Celsius holders actually had. And there's a way you can kind of back through some of that data and find specific crypto addresses, public crypto addresses that these individuals held as well.
Nice.
You essentially just doxed the entire Celsius user base. As if losing your money isn't enough, now you've lost your entire privacy and everyone knows the net worth that you had on Celsius.
Just kicking you in the gut on the way out. Like absolutely insane, man. And like,
can you believe it?
That crypto grifters video I made where I was like, Alex Mashinstry is the greatest grifter of all time. That's aging so well right now. The other crazy thing is like, remember last week we talked about the crypto lark and how he got Zach XBT'd because of, like pumping tokens and then dumping them. Crypto lark withdrew $2.5 million right before it froze. Like, I don't know, right before, I don't think there's a conspiracy here. Maybe he was just like luck that he withdrew 2.5 before it got frozen. But Crypto Lark, the scammer, got out.
Jeez, man. It doesn't feel right.
But you still have money inside of Celsius, don't you, Ryan?
No, it's gone. I don't know where it is. I had money in Celsius, but yes. I actually don't know what the status of my information is, but it's not looking good, David. Rip on that too. Double rip. So, yeah, I'm right there with you, Bankless Nation, if you got sucked into this. Fortunately for me, it was just like, I was just kind of testing Celsius, and this was...
play money? Sure.
Ish. Yeah,
well,
ish. Still
wasn't play money for everyone, so that's unfortunate.
Yes.
And also sorry to people that got doxed, but...
Yeah, totally. It's brutal. Bored Ape creator facing SEC probe over unregistered securities offering. So going after Yuga Labs, the SEC... maybe going after probing first. First you probe, then you kind of drop your case. So SEC doing the old probe. And Yuga Labs, of course, the creators of Bored Apes, very prominent is it number one, number two NFT project?
Number one.
It's number one right now. Okay.
Number one in market cap, not culture in my mind, but that's just my take.
What's interesting is like one of the line items here is the SEC not only investigating Yuga Labs or the sale of the digital assets, right? Like they have a token, some other things, but the SEC is examining whether certain NFTs from the company are more akin to stocks and should follow the same disclosure rules. The SEC is also examining the distribution of ApeCoin. Here's the thing, David, like I don't know what parts of the ApeCoin ecosystem and all the various parts, like what parts of those might be securities and what parts might not be. But are they saying that like the JPEGs themselves, the ape JPEGs themselves are securities?
They are investigating it. Yeah, the JPEG
they're probing it. And let me just say, like a probe itself is punishment. It's investigation. I mean, it's legal expenses, it's punishment. It has a chilling effect on the industry. And here's my beef with the SEC in this type of action is we don't actually know because they refuse to clarify. Are NFTs themselves, the JPEGs, are they securities? Are baseball cards securities? Are antique cards securities? Are pieces of art securities? Of course not. Okay? do monkey JPEGs really need a 10K filing?
Right.
All right. Do they need securities lawyers?
My SEC hat is Yuga Labs is building out a metaverse, right? They took investment from like A16Z and many other people to build out like this or Yuga Labs Bored Apes metaverse. And in that metaverse, a financial asset is a Bored Ape. And so the metaverse has some sort of value to it, and the Bored Ape is correlated or associated with that value. So is ApeCoin. And so it kind of actually does feel like a Howey test, Ryan. I can't believe I'm taking the side of the SEC. But also it just goes to show that we need better laws because it's a goddamn monkey picture. It's not a security. And we need to have permissionless building or else this industry is just not going to express itself the way it should.
Here's the thing. It's just the SEC. They want to take a leadership position in crypto, but all they're doing is vaguely through through these sorts of charges and probes telling us very obscurely what we can't do. Mm-hmm. But they're not telling us what we can do.
Right. It's like, they're just suing us. Yeah.
Yes. They refuse to give us basic clarity. That's my big charge. And I think that as a result of this, so for instance, it's probably no secret, we'd like to do more with Bankless with some sort of membership NFT, right? What's the status of that thing? How do we make sure that that's not defined? Like Gary Gensler's position is
Ryan Sean Adams versus the SEC. That's what happens.
Dear Lord, do we need another one?
I'll take the Treasury. One. Yeah, you take the Treasury. I'll take the Treasury. You take the SEC.
Hey, what about this world where Gensler becomes the next Janet Yellen?
Oh God,
that's a world that could happen too.
Can I get a POAP for suing the Treasury?
Only if you win. Sorry, David. You got to win for us, all right? Anyway, craziness. Again, I'm sure there are things that are clearly securities, probably, but like we don't know what the bright lines are. And it feels like our regulators aren't willing to actually talk to the crypto community and give us some clarity here. I just want some good faith, David. On the releases side, L2 Beat, L2 Beat because they're showing you total value locked for different layer 2s. Now they're also showing you total value locked for bridges. And they're doing risk analysis of bridges, which feels very relevant. So you can look at the Polygon POS bridge, multi-chain Rainbow bridge, Ronin V2 bridge, Avalanche bridge, all of the bridges, and you can see how risky they actually are. So this feels like a very timely release from Layer 2 Beat. And you could find that at layer2beat.com. Pretty badass. What's this one, David?
Yeah, this is Nethermind making an announcement that they have taken Uniswap, and ported it over to Starknet. So remember when we were going through all of the zkEVM conversations, I was like, zkSync, EVM compatible, Scroll, and Polygon going after EVM equivalents. And then there's Starknet, which is just like, we don't care about the EVM. We're building out our own thing. It's called Cairo. So they have taken Uniswap and they have rewritten it, tinkered it a little bit because that's what you have to do, and then applied it to the Starknet ecosystem. So a Uniswap sister thing, which is not exactly what Uniswap is because they had to change it, is now on Starknet, and they are calling it, what are they calling it? Unistark, because they had to rewrite it for Starknet. So Unistark, which is a Uniswap flavor, is now on Starknet.
That's really cool. Obviously, get the scalability of Starknet. Do you see this, David? Blockchain address is now available in Google search. So if you just plug in a blockchain address, Google will display it on Etherscan. I like this. Cool. I also worry about like Google data surveillance and
it's just pulling from Etherscan. It's not any more invasive than Etherscan. It's all public.
Sure. I guess this is true. Here's what I worry about, David. You start plugging in all of your ETH addresses, for example, in Google. Google already has a profile for David Hoffman where it knows your search history, it knows like your browser history, it knows a lot of data about you.
Yeah, but okay,
it knows
like,
maybe where you are in Google Maps.
You're also complaining about the business model of Zapper and Zerion. I'm pushing back on this.
I'm complaining. I'm only complaining because it's Google, and like Zapper and Zerion do not have the scope of a data profile on me that a Google has, and so I just worry about these kind of long-term effects. I'm happy that Google added this. Again, it's kind of like how do we get out of this like Moloch trap of constant surveillance, tech surveillance of us, and that's the part that always gives me pause. But anyway, in the meanwhile, good job, David. You released a new bankless video here. What's this?
Yeah, so this is that new bankless YouTube account. There's new YouTube video. It's like these hyper optimized 15-minute explanation of what Ether is. It's basically my triple point asset thesis. But if you are into these new videos, go check it out. All right, Uniswap Labs is announcing a $165 million raise in Series B funding to bring powerful simplicity of Uniswap to even more people. So congrats on Uniswap Labs. They are raising, and I believe that is the only raise of the week. However, Ryan, I can see on the ground at DevCon that definitely there is some deals being made. There are deals being inked on the floor at DevCon. So there is some activity.
It's definitely the biggest raise of the week. I bet there are others that we missed. But one thing that's happening, we know, is Uniswap, as a result of this funding, Uniswap Labs is hiring. The reason we know that is because they're on the jobs board. It's our weekly reminder to tell you to get a job in crypto. As David dances, I'm going to read some jobs off for you. Uniswap Labs needs a director of product management. David, I think that's
not technical.
Okay. They also need a developer relations lead.
Probably not technical.
Probably-ish. Senior front-end engineer at Uniswap, senior back-end engineer. Those are definitely technical. Solid World DAO needs a senior Web3 developer. Rubicon smart contract engineer. Bankless still looking for a social lord. Optimism hiring a bunch. So is Rabbit Hole. So is CoinShift. Go head on over to bankless.pallet.com/jobs and sign up so you get these in your inbox. Get a job in crypto. Now's the time. Guys, we got a lot more coming up, including some hot takes from crypto Twitter. David, you've got some takes on the Coinbase documentary. I haven't watched it yet, but you have. We'll talk about that and more when we come back. But before we do, we want to thank the sponsors that made this episode possible.
The Layer 2 era is upon us. Ethereum's Layer 2 ecosystem is growing every day, and we need Layer 2 bridges to be fast and efficient in order to live a Layer 2 life. Across is the fastest, cheapest, and most secure cross-chain bridge. With Across, you don't have to worry about high fees or long wait times. Assets are bridged and available for use almost instantaneously. Across's bridges are powered by UMA's optimistic oracle to securely transfer tokens between Layer 2s and Ethereum. Across is critical ecosystem infrastructure, and Across V2 has just launched. Their new version focuses on higher capital efficiency, Layer 2 to Layer 2 transfers, and a brand new chain with Polygon, all while prioritizing high security and low fees. You can be a part of Across's story by joining their Discord and using Across for all of your Layer 2 transferring needs. So go to across.to to quickly and securely bridge your assets between Ethereum, Optimism, Polygon, Arbitrum, or Boba networks. NEXO is your financial hub for all your crypto needs. NEXO lets you buy crypto instantly with your credit or debit card or via bank transfer. And they also have an awesome advanced trading platform, NEXO Pro, where you can get the best possible prices and trade with 50% discount on fees. And NEXO also lets you earn interest on your crypto in Bitcoin, ETH, or other assets. And they also give you an instant crypto line of credit with as low as 0% APR. And they also give you access to a crypto-backed MasterCard, of course, earning you more crypto when you use it. So, enhance your financial life with NEXO, who ensures all credit lines are over-collateralized with insurance on all custodial assets. NEXO, the right place for your crypto. So click the link in the show notes to join over 5 million users who are getting the most out of their crypto.
Guys, we're back with takes. First take, David, you watched the Coin documentary. It's called Coin, A Founder's Story. What's your review? How many stars?
5 out of 5 stars. I thought it was super, super good. And there's also so many more movies about Ethereum, about crypto coming out, like documentaries. And I think it's going to be a really actually great onboarding and PR tool for crypto movies. Just like, yeah, let's tell you the story, the long-term story.
Real humans.
Real
not
humans.
Not just the shadowy
super
coders. Yeah.
And Brian and Coinbase has always kind of been like a black box. It's a little bit, hey, what's going on over there? Like, what you guys up to? Like, not for any particular reason. Brian's just kind of an introverted person. And every time I learn more about Brian, either through his interview with Peter McCormack and then our podcast with him, he doesn't do very many public things. So this documentary was awesome just to see just the story of Brian and Coinbase. And I tweeted out, every time I learn more about Brian, I discover more reasons to respect him. And so he's just a guy that saw, he first Coinbase was a wallet. And he was like struggling to find like a business model because no one had any Bitcoin. So he's like, oh, I'll just put in a buy button in the wallet and I'll let people buy Bitcoin so they can use my wallet. And then he learns that like, actually that's the business, is selling Bitcoin to people that want to buy it. And then the ball starts rolling downhill and Coinbase just becomes huge. And him and Fred Arison started building this thing. And so like, as I've learned about Brian, he's gone from like, for me, just a successful founder to an industry leader to like a straight up personal hero. Like that guy has like done so much for the industry. And I don't think we give him enough credit, but that's my take of the week. The coin movie was great, and Brian's a great guy.
That's awesome. I think, David, in like the the crypto banks. We're gonna have some banks that like stand up and uphold crypto values for us. I'm hopeful Brian Coinbase is among those. I think there will be, sadly, some other crypto banks that kind of sell us out to the regulators and politicians and are not going to be fans of DeFi. And those will emerge too. But I think Brian's always been here for the right reasons. And we're like excited about that. David, this is a take from a congressman, Representative Bill Huizenga.
Yeah, and Bill says, the fact that Gary Gensler has appeared twice with Jon Stewart before attending an oversight hearing with the Financial Crimes Enforcement and also the Democrats, just like, doing his job, is alarming. Appearing before Congress is part of your job, he says to Gary Gensler. We look forward to seeing you in 2023 under new leadership. So a congressman, a House of Representatives congressman, is saying, Gary Gensler, stop going on Jon Stewart and start showing up at your job.
Stop trying to be an influencer.
Stop trying to be an influencer. Yeah, God. Ryan Sean Adams, here's a take from Ryan saying, apparently, the era of easy money is over and crypto is just a speculative asset bubble that will never recover, and there was never anything real here to begin with, and you should have sold the top, you idiot. And then he finishes saying, hello 2018, good to be back. What do you mean, good to be back?
Thanks
and why'd you call me an idiot?
By the way, thanks for nailing the tone of that. It was just definitely sarcastic.
Yeah.
It just feels very 2018 to me. Like at a time where everyone's saying crypto is over, it was always a speculative asset. There's never anything real. Go to Reddit and try to say something positive about NFTs right now. You just get absolutely brigaded. And this reminds me so much of 2018, honestly, where we had kind of the backlash on the back of ICOs and Ethereum was like nothing and there was no such thing as DeFi and all ICOs and all of crypto was a scam. Feels like 2018. Now, I know there are some differences. We've got war in Ukraine. We have like massive macroeconomic like pressures and things we didn't have in 2018. But that's what everyone says. There's always in 2018, people are like, no, this is different than the 2015 bear. Because like in this bear, XYZ, right? And like everyone always says that. Anyway, to me, it's kind of home. It's back to 2018. It'll take some time to recover, but I'm super confident we're going to come back stronger. It just might take a little bit. David, what are you excited about this week, man? And why is it DevCon?
Oh my God, DevCon has just been so fun, man. And this was a picture of me at Rave last night, Ave's regular party that they always throw. And this is Dankrad. So Dankrad Feist, this guy, super German, always wears a collar in the middle of this. Hey,
you said there were no suits. He's got the sports coat on.
It's different. It's different when it's Dankrad. Dankrad doesn't count. He's just German. So I took this photo with Dankrad at Rave last night. Yeah, man, like it's so great to see all the builders around.
This is like a big brain researcher behind Proto Danksharding, by the way. This
guy's like knows crazy polynomial math, and there's like rave lasers in the background.
Crypto is great, man. I love it.
And it's like the energy here is so awesome. And like, even though it's the bear market and people are sad about the prices, and my metaphor for these markets is like in the bull market, it's like a bonfire, but in the bear market, like the fire starts to dwindle. But the fire at DevCon is really strong. And like even the Boys Club event also last night was just the energy at Boys Club was crazy. And it's cool because Boys Club is like, I don't really think like Boys Club and like core layer 1 Ethereum protocol development, like that's kind of like they don't really
Boys Club, by the way, is it's a Web3 DAO that
it's a social organization.
For primarily like representing women and non-binary people. So when people hear David say Boys Club, it's not like it's a joke. It's a play on words. All right, it's not an actual Boys Club for boys.
But like the Boys Club showed up and threw like one of the most high energy vitality events, and everyone was having a really good time. And so like as like energy is going out of the space, and it's just a good move by Boys Club because that's what they do. They throw really good events. Really good parties. And there's not many like other conferences out there that have like enough life in them for them to throw a good event because like, no one wants to throw a depressing event. So what do? Oh, they go to like the crypto nerds at the developers convention, and then they throw a really good event there because that's where all the vitality is in this industry.
Because developers aren't going to throw they're going to buy boxes of pizza. Okay.
Right. And like the cool thing about DevCon and why I'm so excited about DevCon is it's a tech conference. but it goes to very specific cities. It goes, and it's not San Francisco. It doesn't go to New York. It goes to
off the beaten path.
Bogota. It goes to Osaka.
Colombia.
It goes to Prague. And it's not just a tech conference. It's also a cultural conference. And that's because Ethereum's not just a technology. It's a social organizational technology. It's a movement. And so and this is why the DevCon execution team is like, so shout out to Skylar at the EF.
They got a lot of pressure, by the way, for going to Colombia because, people are saying, hey, it's too dangerous. Like you can't throw conference there. It's not large enough. So all sorts of reasons why.
People do have like bodyguards and stuff, but like it's also like if you just live with common sense, like you don't get yourself into trouble. I haven't heard of anyone getting into trouble, but like leaning into the culture side of things for every city that we go to, and it's just like the right branding for Ethereum.
What's the next city, David?
Next TBD. People are like, this is where people like start to lobby the EFs. Like, I want to come to my city. So there's like a movement to get people to get the DevCon in Turkey, in Istanbul.
I think it's going to be somewhere you don't suspect, right? And,
definitely. Yeah.
Istanbul would be one of the top places I would not suspect, actually. Yeah. Right. Anyway, lots of places.
That's what I'm bullish on. The fact that DevCon is not just a tech conference; it's also a cultural conference, and I mean it's important. This is where we come together as a community and hang out and make sure that we're not just like face down buried in code all the time, or in our world podcasts.
Well, that's awesome.
Anyways, awesome. What are you bullish on, Ron?
I asked a question this week on Twitter. Sometimes you get good answers to questions on Twitter. Sometimes you get bad. I got a lot of good ones. I said this: from the 2015 to 2016 bear market, we got Ethereum. From the 2018 to 2019 bear market, we got DeFi and NFTs. What's going to be the big thing coming out of this bear market, the bear market of 2022 that we're in? And I was just really excited about the range of different answers to the question, because it wasn't just a consistent, there wasn't like a group think of it's all going to be this or it's all going to be that. Impact DAOs, DeFi science, refi, Web 2 integrating Web 3, GameFi, broadening of NFTs to research IP and NFTs like music, video, and other verticals, more noob-friendly DeFi, social crypto, all of these answers to the question. My answer to this question is probably the layup answer, which is like layer twos. It seems so obvious that coming out of this bear market, layer twos are going to be like the absolute vanguard of crypto. Like they're going to be stronger. They're going to be in higher use. I don't know, David, if you saw the Ethereum quarterly report, state of Ethereum report, like earnings report we released on Bankless last week. Ben put this together for our team. Ethereum's down in just about every category, right? Like revenue is down 86%. DeFi total locked value is down 60%. Stablecoin supply down 21%. Like it's very clear that we are weathering a major contraction. But the bright spot was layer twos are up 97%, about 100%. And we're doing that in a bear market. So this to me is like, these are kind of the early saplings. They're kind of on the tree of future life and future progress. So that's what I'm excited about. That no one actually knows what the next big thing is going to be tells me that it could be almost anything, and it'll be unexpected, and that we're pursuing so many different use cases at the same time. And then I just see obvious things like layer twos, which are going to be a big deal.
100%. Also bullish.
All right, man. I know you got to get somewhere real soon for DevCon, but let's get to the meme of the week. What are we looking at here?
Yeah, this is I can't remember what kind of flavor of comic this is, but it's like the guy who's interviewing for a job, and the job interviewer is asking, "Can you stop inflation without causing a recession?" And the interviewee says, "No, I can't." And then the guy says, "Okay, you're hired." And then it turns out that this is the Federal Reserve. Cyanide and happiness. That's what this is. Yeah, that was pretty good. Awesome. And very emblematic. Yeah.
All right, guys. David's got to get to DevCon. I know he's going to be on stage presenting a few things. Actually talking, I think, doing a panel coming up soon.
I am moderating a panel that is definitely stretching my technical ability. It's account abstraction, so I have to finish up doing my research. But it is also the only panel that Vitalik Buterin is on the main stage. So your boy's hosting that panel in a second.
He chose to do account abstraction as his thing that he wants to talk about, huh?
Yeah.
That shows how important he thinks it is. Well, cool. We'll leave it at this then. Risks and disclaimers, as always. Got to tell you that crypto is risky. We're definitely on the frontier. ETH is risky. DeFi is risky. You could definitely lose what you put in, but we are headed west. It's the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.